뉴욕나우. 안녕하세요. 뉴욕나우 강영연입니다. 글로벌 시장에서 통하는 투자법을 전해드리는 뉴욕나우. 오늘은 로버트 네스토 크래프트 테크놀로지 글로벌 고문과의 인터뷰 전해드리겠습니다. 네스토 고문은 세계 최대 운용사인 블랙록, 뱅가드 등에서 일했고요. 특히 블랙록에서는 스마트 베타 ETF 사업을 총괄하던 핵심 경영진이었습니다. ETF 시장에서 주목받고 있는 AI ETF 이야기와 함께 미국 주식시장 전망, 중국 투자에 대한 견해 등 최근 시장에서 관심 있는 주제들에 대해서 얘기 나눠보겠습니다.
I've spent 30 years in asset management, mostly in the US, although I do have experience in the European markets and some in the Asia. So I worked for 16 years for Vanguard in a variety of different product development areas, as well as business and corporate strategy, sort of, helping Vanguard think about the different businesses they should be in. After 16 years there, I went to work for the iShares business at BlackRock. And I spent 11 years there, almost exclusively in the ETF business, so the iShares business there. And I, again, spent time mostly on product development and business strategy, developing new markets for the firm, new client areas for the firm, and did a variety. My last role there was leading all of the factor business for the iShares business at BlackRock. So leading all of the product and sales and marketing around factor ETFs. And then the last 3 years, I was head of direction ETFs, which is a smaller mid-size ETF company focused on tradable ETFs. And that's actually, I worked with Francis there for a couple of years. And then 6 months ago, I decided to start doing consulting work, and I joined Craft as a global senior advisor there and helping them grow their business in artificial intelligence. Yeah, so I believe artificial intelligence is steadily transforming our entire world, from manufacturing to investing to marketing and the likes. And I think Craft is at the cutting edge of one of not just the catalyst for investment management globally, but for all of society. And I think the rise of artificial intelligence will be one of the very key catalyst drivers of investment management globally for the next decade or more. And Craft has a terrific team of talented investors and technologists, I think, that are really poised to drive this next generation. And I'm really excited to be part of it. Artificial intelligence, Angela, is still fairly new in the investment circles worldwide. And so Craft is really at the cutting edge of, I think, what will drive investor considerations for years to come. I think it's fairly similar, Angela, in the US. So I think most investors are aware that artificial intelligence is rising very, very rapidly and that it's impacting, all of society, manufacturing, marketing, investments. But I will say, like Korea, a lot of people are still uncertain about what that looks like. I mean, a lot of people do not fully understand how yet. I think it varies. You see very large, sophisticated technology companies, even investment managers with large quantitative investment areas are ahead of the curve. They're thinking about it, every day. And those are a lot of the firms that we are talking to. Individual investors, often called retail investors, I think are earlier on in that journey. But I think everyone understands that it's transforming us societally. And so I think the interest and questions will only grow from here. I think there's a lot of similarities to sustainable investing and ESG. many people understand that that's transforming, and they understand at a high level climate change is transforming us societally, and that ESG is going to drive a lot of that in the future. But there's a big education gap that still needs to be closed. And so I think it's definitely going to have a huge impact, but there's a lot of education that still has to happen. Yeah, I think so. Craft has, 4 ETFs that are available to US investors. They're active ETFs with an artificial intelligence driver. Active ETFs are still early in their adoption, in the US as well as around the world. The vast majority, as you know, have been index or passive structures. So, but people understand that the ETF is a great vehicle for very efficient, very low cost vehicle for executing your investment views. So there's not that many, ETFs yet, although I think there will be many more in the coming years. There's not that many ETFs yet that are being driven by artificial intelligence. So the biggest competitive challenge for Craft and how we're thinking about it is to get very loud, for lack of a better term, and grow our voice in the marketplace and help people understand exactly what we're delivering, how we educate them. But investors are very much interested in active ETFs to accomplish or reach alpha. And I think the biggest challenge for us, for Craft, is to help educate the marketplace on how AI works. So that's the biggest competitive challenge, because there's not many other providers yet in the space, but there will be over the next 18 to 24 months. I think it will. I think today most people are accomplishing their core investments through traditional passive investment, but almost every investor has an alpha portion of their portfolio. Today, the alpha portion is generally captured through mutual funds or through individual stock selection. I think that the opportunity for artificial intelligence ETFs is to displace a lot of those active mutual funds and a lot of that individual stock picking. And then slowly but surely over the next couple of years, start to replace large portions of the core allocation, even to index portfolios in investors' asset allocation. So a lot more to come. I think growth is going to be absolutely tremendous, and Craft is in really a great position to capitalize on that. So obviously we all know, crypto and digital currencies have been growing immensely. I think the first Bitcoin futures ETF is just further validation and confirmation that digital currencies are increasingly an accepted asset class, for investors. I think the next big step will be an ETF holding Bitcoin directly. As you probably know, the first ETF is holding Bitcoin futures. There's still some concern in the US among regulators about allowing ETFs to invest directly in Bitcoin, but I think it is inevitable that it's going to happen. It's not a matter of when, but if. And I would guess that's probably going to happen in the next year. Now, on your point, your question about sort of controversy and how do you evaluate and is crypto in a bubble? It's difficult to always tell whether a bubble has occurred until after the fact. Clearly, crypto has had quite a run up in value particularly over the last couple of years. Whether it's overvalued or not, I think it's tough to say, but I believe unequivocally that it is here to stay, and it will become an increasing medium of exchange of value for investors. I'm not a bull or a bear on its current valuation, But I am very confident that the volatility will remain very high for investors. As an investor, you need to be prepared, for exceptional potential falls in the short term to intermediate term. But I think unequivocally, it's here to stay as an investment, and it will only grow in its use from here. I think it absolutely is. Obviously, as you said, it's been a difficult period for investing in China in the last year, but I think the longer term opportunity is still very strong. I mean, as an investor with any kind of global reach, China is simply too large of an investment opportunity to be ignored. It's the world's second largest economy, obviously, and probably will overtake the US sometime in the next decade. I believe China has real sort of long-term interest in continuing to welcome capital market investors. It may be rocky, but in the short term and probably, volatile, but I'm personally very long-term bullish on China. And I think the market's now reasonably valued. Obviously, as you said, some of the tech stocks have fallen quite considerably. They probably got a little ahead of themselves in valuations, in some cases, like many of the US tech stocks that people are worried about. And so it could be rocky in the short term, but I am very long-term bullish on China, particularly at current valuation numbers, which are much, much more reasonable than they have been, in probably a couple of years. I'm fairly cautious in the short term, particularly on the US markets, largely because the valuations are very high, particularly in the technology area. I believe there's better value in developed Europe and Asia, particularly in emerging markets. Because I'm a bit cautious in the short term, on a sort of sector basis, I think financials, particularly banks and healthcare, will likely do better, as the inflation and supply chain risks are not nearly as significant with them as they are in other areas. So I'd be focused on ETFs regionally in Europe and Asia, particularly in emerging markets. I'm not as bullish on North America, largely the US and South America. So I would look for ETFs in those regions that cover those markets, as well as areas like financials and healthcare as a sector basis. I'm, to be clear, Angela, I'm still bullish on tech as a business matter. I think their businesses are very, very strong, but right now the valuations are very high, and they're almost priced for perfection in the US. I think there's better values for tech in Asia, particularly in China and South Korea. Yeah, inflation, you're right, is undoubtedly a risk in my view, and it could drive a lot of market turbulence, I think, particularly over the next 12 to 18 months. Although I'll tell you, I believe central banks have the considerable tools to deal with it, far greater than, frankly, they have with disinflation, which was the concern when the pandemic started, right? About that. And especially at the place we are with interest rates around the world, they have more tools to deal with inflation in that regard. So I'm not that worried about it sort of longer term. The critical question, obviously, is how much might they have to slow the economy globally to wrestle with it if it doesn't, if it gets out of control. So it is a risk in the short to intermediate term. I would be, as an investor, be more defensive now and be looking at, energy and, like I said a little bit earlier, financials and healthcare, which are much less vulnerable to inflation than other areas of the market, such as industrials. And as it relates to fixed income and bonds, my view is they're simply not paying enough for the risk. So I would stay, as it relates to fixed income, which I think still has a role in portfolios, but I would stay very short in duration because longer term bonds are simply, they're just not paying enough for the risk that is there right now, particularly the inflation risk. That's the question that many people ask because the valuations are so high, particularly on US tech stocks. I do not expect a major correction in US tech stocks globally, but I do think they may fall, 5 to 10%, particularly the mega cap, ones. I do not expect a big correction from them. I think their businesses remain very, very strong. And normally you would see a correction where there is major business risk. I don't see major business risk. I see valuation risk. And in that regard, I think the most likely scenario is that they go sideways for the next 12 to 18 months, which will allow their earnings to grow and their valuations to catch up. I just think there's better value, elsewhere, particularly when you think about the largest stocks that make all the headlines, the Apples of the world, the Teslas, the Nvidias. They're all very, very strong businesses. And I don't think their businesses are at risk. They're just, very, very high, very, very high values. And I think there's better values, frankly, in other areas, even in mid-size, tech companies like Cisco and Intel that are fairly big global names, but have not grown nearly as much as the mega cap tech stocks in the US. And there's a reason why, right? They've grown more slowly, but their business prospects are fairly good, especially relative to their valuations. And they have strong businesses too, much like maybe not as strong as the Amazons of the world and the Teslas of the world, but they still have very, very strong prospects. So I think there's better value in US tech stocks away from the mega caps. I also think there's good value in some of the tech stocks around the world. I think we talked a little bit earlier about some of the Chinese tech stocks that have fallen quite dramatically. They offer fairly good value now. I think some Korean tech stocks like Samsung Electronics has had a very, very good period. But if you look at their price earnings ratio relative to like Apple, they're still very, very reasonable. I think Samsung Electronics is somewhere around, 17 or 18 in their price earnings ratio. I just think they're better values. And, other firms I think about in Korea like SK and LG Electronics, were both, I think, rumored to be working with Apple on their car project. If that comes to fruition, those could be game-changing moves, for those stocks. So I just think there's better value outside of the US mega cap stock world of like Amazon and Apple and Tesla. Did you know we've gone through a period of a decade where the US has outperformed nearly every other, market around the world? I expect that Europe and Asia will do better than the US over the next 3 to 5 years. I think they are reasonably valued. I think the US is highly valued. I do not expect a major correction for the US. But what I do expect is increasing volatility for a lot of the reasons you mentioned, concerns about inflation, supply chains, disruptions. I think the US is likely to go sideways, so maybe slightly down, but I think there's going to be pretty high volatility in the markets. And I think emerging markets and developed Asia and developed Europe will do better. I think potentially considerably better over the next 3 to 5 years relative to the US market. I would be much more overweight in those markets relative to the US. Yeah, so I've been, to be quite honest, bearish on the US dollar because of that the US government is taking on. But as you know, the US dollar remains the world's currency. Many things still trade primarily in US dollars, whether it be, commodities and the likes, and it's still a safe haven for many, many investors. So I don't expect the dollar to fall dramatically, but I do not expect it to rise relative. And I'm much more bullish on, from the US investors' perspective, on foreign currencies than I am on the US dollar. I think the US dollar is likely to go, in the short term, probably just go sideways. But in the intermediate to long term, I think there's going to be a lot of pressure on the US dollar, largely because of the massive debt that the US has been taking on. So I am a little bit bearish on the US dollar relative to the world's other major currencies.